Hello, everyone. Welcome back to the channel. This is Matt with Green Bar Trading. So I'm going to try to make this as quick as possible because I have a bit of a cold and this was daylight savings morning. So I actually have been up since about 2 o'clock in the morning. So I'm going to do this, and I have so much great information to share with you guys, but I'm going to try to get through this as quick as possible. There is a lot to go over, including 5 stocks that I see very good value in, because this is the type of market that you are going to want to start building a watch list, okay? The market is way overextended. When the market is this overextended, you have on the Nasdaq alone, you're 6% over the 50 moving average. On the S&P 500, you are 5% over the 50 moving average. Every time this has happened, there has been a pullback. That's very overextended. The RSIs are through the roof, but this is that moment that you want to start building the most beautiful watch list that you have ever made. Because when these stocks come back a little bit, you're going to want to get in them. And that's what my picks are going to be. It's going to be about building a watch list, and that's what I like to focus on. Instead of jumping in at the high levels, wait for some of these to pull back. The market is not going to continue to go higher without a pullback. It has never happened before. It probably will never happen because investors want to wait for good deals. Now, the only reason why we have been up so many days in a row, Nasdaq 10 straight days, closing higher than the day before, S&P 500 on a 7-day win streak. And the reason why I wasn't calling this out in our last weekly watch list video, for obvious reasons, at that point, the Nasdaq was 5 straight days, S&P was only a couple of straight days, but that's normal when you're coming from a 6% drawdown, that mini correction that we saw. It's normal to then get a rally. I still think we're going to see a rally until year end, but I think we need to be patient, wait for a little bit of a pullback, and buy some good prices. I want to wait for the right time to enter. So anyway, this is our Discord here that you see in front of me. It's 99 bucks, one payment, and you have access to every single private channel. Me, all the other traders that are in here will answer mostly any of your questions. If they can't, I could jump in and help. So that's our Discord. And let's start off like I usually do. I want to look at our Webull platform because this does not show my key levels. My key levels on the Qs, on the SPY, on the ES futures, that's for our private group. These are very important levels that I like to look at. And, I'm going to keep that value for them in there. But what we can look at is this extension. And this is the Dow Jones. So the DIA is the diamonds. This is the ETF for the Dow Jones. Look at how extended. This is the 50-day, the green line here. Look how extended we are off of that green line. And if you can see back here in May, when we got that extension off of the 50-day, we pulled back. Really extended off the 50-day, we pull back. We continue higher eventually, but the market doesn't just go straight up forever. There's got to be either a little sideways trading, a little pullback, That's what we're waiting for. I'm not saying we're about to get a crash or a huge correction. I don't think that's going to happen. I think dips are going to get bought up because the people that missed this, that we've been calling out on this channel forever, you have to be buying dips in this market. So I see maybe, a 1 to 3% pullback to get closer to the 20 EMA, maybe to bounce off the 50 moving average eventually. Not this week. Maybe it does happen. I don't know. But, we've been seeing that weakness around the third Friday of every month. That's when options expire. So maybe it doesn't happen, this week or next. But there will be a pullback because the market always pulls back when it gets extended. Just totally normal. So that's why I want to build my watch lists now. So that's the diamonds. Taking a look at the Nasdaq. This thing has been a monster. But take a look at this RSI. We are at the highest RSI levels in more than a year. Probably since the coronavirus. Let's see if we could go back. Let's see, what we hit here? 80. We're at 78. So we had 80 back in September 1st, 2020. And what did we do when we got to that really elevated RSI? We sold off. We rebounded, but we sold off. These are very high levels of relative strength. The time to buy, which we were, saying ad nauseum here, was when we were in these uptrends of the RSI. Here, am I going to start going long every single tech stock? No, I don't think it's wise, because then I'm going to be sitting on a drawdown if we do pull back a little bit, or my money will be tied up if we just trade sideways. I want to wait for a better deal. So I'm going to build my watch list. I have a couple of Nasdaq stocks on my watch list that I'll share with you guys as well. And then if we look at the SPY, the same thing, guys. The same thing. Look how extended off this green line, which is the 50-day. That's what we usually do. We get extended. We come back to the 50. Every time we come back to the 50 and then go higher. This was that 6% correction that we saw. This was a great correction. Little mini one. Not even 10%, just a 6%er, but it was more than we've seen since the previous corrections back in September and October. So it did take over a year to get something bigger than these little 3%ers that you see here. So am I saying, that I see the market coming back to the 50 and bouncing again? I don't know how long that will take. It will eventually come back to the 50, but I just don't know the time frame on that. Sometimes after a big correction, not a big correction, but after a correction like this, you might see some sideways trading before, either breaking higher or coming back a little more. So, we just have to monitor these things. So that's the three major indexes that I wanted to go over. And now I'm going to go and show you guys a couple of, interesting things for the week. One thing, and I like to really look at this. This is a contrarian indicator. Contrarian meaning the more bulls, I would be willing to say that the market's going to go down. You might be asking yourself, why would you do why? That makes no sense. Well, if we look back since 1987, this study has gone on. And every single time that people get too bullish, it comes back down. The market corrects. We hit 40 and shot right up to 54 from, low 40s just a couple of weeks ago. That's a pretty big move. Now, that's this previous one. I'm going to be interested to see what this week's numbers show. If this ever got over 60, most of the time when we get up there, the market corrects a little bit. So I'm going to be interested in that. But this is a contrarian indicator. The lower the bull number, which is what we called out 3 weeks ago at the bottom of the market when we pulled back, I said this is great buying opportunities right here. These are buy signals. This is getting into a sell signal. And if we got higher on the bulls, it would just reinforce that sell signal for me. And it's something that I watch. All right, so we go over that. You know, these are interesting things that I like to look at. Trading does not have to be gambling. You can make higher probability trades, and that is what I focus on. I take all the information that I have here, and let's face it, you can find so many things out, you know, on the internet, wherever. There's so much information, good information. This is Earnings Whispers. Great, you know, they're always posting. If you want to follow them on Twitter, you know, they always post some really nice things around earnings. So this is this week: Monday, Tuesday, Wednesday, Thursday, Friday. There's a couple interesting ones here. Coinbase, you have AMC, Roblox, Affirm. You know, these are really interesting ones this week. Zynga basically hasn't gone anywhere. Lemonade, you have Blank, which has been great with the EV charging. This is one that I was looking at when it was $7 a share, and now I think it's trading at about 30 or 40. So there was one other one I was looking for. We got Affirm. Where is it? Well, whatever, you get the point. So these are the earnings this week. And let's see what we got next. I wanted to show you guys the treasury yields. If I have it here. Guess I didn't put it on here. All right, so this right here is the economic calendar. We have the PPI, we have the CPI. These are inflation numbers that are going to be coming out. So you have that Tuesday and Wednesday. Thursday's a veterans holiday. You don't have any, nothing scheduled for that day yet. And Monday, there's nothing scheduled yet. Sometimes these change. So I do update our Discord every morning with the updated economic calendar because it is still the weekend. So some things are just not on there yet. All right, so I think we could let's jump right into it. We're going to go into my watch list. Let's just start with Target since it's on here. And by the way, you can see how big my watch list has gotten. This is what you want to do. Just keep adding stocks that you see value in. We called some of these breakouts in our last week's video. I noticed a beautiful bull flag, and then we got the breakout. This was all called last Sunday. Another one, ASO, called last Sunday for the breakout. This was all called before these huge moves. So, you know, this is all on our Discord for our paid private members. They get to see these picks, and this is what technical analysis can do for you. This right here, this trend line, this beautiful wedge that is setting up on the daily chart, this is a break and a retest to the penny. So this is a good entry. If you didn't want to chase, you wait for the pullbacks. And that's what I'm talking about with not chasing stocks on the initial push up. Wait for it to retrace and then get long. So this is one that's still very much on my radar. They have earnings coming up, I think, in a week or so. So This is a great stock, ASO, great company. They make money. They're doing very, very well. This is a stock that has gotten upgrades, in every single thing, institutional buying, accumulating of shares, everything that you want to see in a stock. And this is a stock that I've been calling out since $15 a share. It's not even on this year's chart when I started calling this stock out. Told my entire family to buy this when it was $15. So, I'm really, really excited for what this company is doing. Now, you can see it got up to previous highs and then it pulls back. That's what usually happens. And then it'll consolidate a little bit and then go for more. So that was that. We called that one out. Now, one that did not work, and now the chart is totally broken, is Peloton. Peloton had a very nice chart going. It had a range it was trading. We started making money on it when it started to curl back up. The only thing is, they had earnings coming up. Now, this is a perfect example of not holding anything through earnings. The chart is now broken. The chart's broken. This is where the next candle is. There's nothing to, do with this now. When a stock drops this much, the normal rule is to wait at least 3 days. Wait 3 days and let that huge downside move either continue to sell off a little bit before it starts to reverse, but that's the general rule. So this right now is untouchable. That's why I sold everything before earnings. That's just the smart thing to do. I don't hold these through earnings. All right, so let's get back to the watch list. Going back to Target, because we went over ASO. That was one of them on my watch list. And by the way, I think consumer spending, this holiday season is going to be really, really good. So Target, this is the 1 year daily chart for Target. This line you see here, this is the 20 EMA. You can see here how it bounces off of it. And then once it breaks it, the 20 EMA acts as resistance, can't get over it. We bounce now off a trend line. And this right here, this reversal and the break of the 20 EMA, this is now bullish. It comes back to the 20 EMA, and this is where you want to be entering. You have the 50-day moving average below it as support now, and I think this is going to go back to the top end of this channel, which is way, way up. Now, it may take some time, but this is nice. This is a little pullback here. You didn't want to chase it. It pulled back $6 a share, and they do have earnings coming up as well. So just keep in mind that type of stuff. Another one I'm super excited about is Norwegian Cruise Lines. Where is it? Where are you? I'm just going to type it in because I can't see it in my watch list. It's good to remember all these ticker symbols, by the way. Take a look at where Norwegian Cruise Lines was trading before the pandemic. We're up here with the highs, about 60. We were trading in a range from 46, from 40 to 60. Sold off, and it started the climb back, pulled back, starting the climb. Now, that's why I like this. I see this stock eventually, I don't know how long it'll take. Now, this could be a more longer term investment, but I can see the stock eventually getting back to those pre-pandemic levels and then even higher than that. Now, I listened to the CEO after their earnings report and what they see happening on their ships, and the fact that they're going to have their entire fleet. I think by April of 2020, all 28, 29 ships are going to be in action. They already have bookings. you know, through the roof for 2022, 2023. People want to go on these extravagant cruises to all these different things. They have an around the world cruise. They have all kinds of things. And they're seeing very high demand. Now, right here, if I'm doing technical analysis, this is what I see. I see a level of resistance. Now, the reason why is because it went up, you know, a decent amount in a short amount of time. Do I think it'll eventually break through this level here? Yes, I do. I think this will be eventually setting up for a nice flat top breakout. And then the next levels will be up in this general area here where you can see they top out, they pull back, top out, pull back, top out, pull back. So that's, you know, that's going to be the next level. So once 30 breaks, then you're going to have 34. Once 34 breaks, then you go back up to the 40s and higher. But this is something that, you know, cruises and people wanting to take vacations, that's why it's on my watch list. I'm building my watch list now to try to get in some of these really good stocks. So we went over Target. We went over ASO, Norwegian. So I have just two more for you guys. Airbnb. This is a beautiful breakout here. Just a very nice breakout. Some consolidation here for, you know, about a month and a half of consolidation. This now broke out of that. It broke out of that in a huge way. In a huge way. Look at this. 23 points, 13% on Friday. And you can see once this thing gets going, I mean, it could really, really move. So we have, you know, previous resistance will be probably about there where we would see the next area of profit taking. You know, people that got in here, they're going to sit through, you know, maybe some pullbacks, or, you know, maybe you get the continued momentum right away and you get up to this area and then you pull back before breaking out. So that's why Airbnb is on my list. You know, people are going places. I have somebody that, you know, works for me currently, and they're going on a bachelor party with, I think, 18 people to Nashville. What do they choose? An Airbnb. I mean, this is the way people do things now. And it's just a great company. They made money right here, had great earnings, and the stock took off. So I really, really like Airbnb. Do I like to chase? No, but this might be a momentum trade to jump on. High volume, everything else. And then I'm just going to finish up with Upstart. All right, so Upstart has a very nice chart. I really like the way this chart looks. We're obviously in a very nice uptrend with the stock since it IPO'd. You know, back here, it has gone nothing but up. Now, it is a pricier stock. They have earnings coming up here this week. But what we did was we didn't chase it. We didn't buy it when it hit 400. It has now pulled back and it's consolidating. This is what you like to see. You like to see the push-ups, right? Pull back, little setting up. This is what I like to call, not me, but these are bull flags. This is where you want to enter, and then you get the next push-up, and then you get a pull back to the 20, pull back, push up again, comes back down, just straddles that 20, and, you know, this is a very clear consolidation level here. I'm just going to mark out where we saw the algorithms really come in. So about 310 should be support now. And, you know, higher highs, higher lows, setting up. It looks like this wants to get going, but you have earnings. So, we have to either play the day after earnings or, just wait this one out. We have to just wait and see what the earnings were. They're profitable, which is very good to see, especially with an IPO, a new company. And, to me, I like the way the chart looks. I like the fact that we pulled back to a level of support, and this is support here. This could always be a buy and sell if it breaks under the 50 moving average, which happens to be at support. 310 is where the 50 is. That's where support is. I like to enter around or as close to those levels as possible. But as you see here, I mean, it had a very nice day on Friday, but it seems to be doing this where it pulls back and it's kind of just consolidating. And it's got a pretty big range. I mean, 310, 315-ish, hits 354, pulls all the way back to 320. So, it's in that area. It's more expensive, so options on it will be more expensive. You have earnings coming up, which is going to make options even more expensive on it. So, this is not going to be for everybody to trade, but it's definitely on my watch list. So that's it. That's the 5 stocks that we're looking at. And I think we went over everything. So I'm going to leave you with this. Don't fight the Fed. Don't fight the tape. What does that mean? Well, the Federal Reserve, Jerome Powell, their monetary policy has been very good for the stock market. And that means don't fight the Fed. So don't trade against the Fed. They're giving you a good environment for more bullish action. Don't fight the tape. What does that mean? That means don't trade against the trend. The tape is showing us, the prints are showing us a lot of bullish action as the stock market just keeps going up. I mean, the gains this year, unbelievable. I never would have thought this going into 2021, that we would see an entire year go by before we had a correction of 6%. Unbelievable. So the market is forward looking. It is seeing good things, but I'm not going to chase it right now. RSI is through the roof for all 3 major indexes. I want to wait for a good time to enter, and that's why we're building these watch lists right now. So I hope you enjoyed the video. If you're new, subscribe. Hit the thumbs up for the video. All this research, this information I'm putting out on YouTube, it's free. All I ask is you hit the thumbs up, and if you're new, subscribe, maybe share it with a friend. I do have our private Discord if you guys are interested. The link is in the description, and that's it. So thanks, guys, for watching. I'll see you back on the next one. Take care.